Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Make sure you follow that prompter by hitting the like, subscribe, and the notification bell. But before you hit that subscribe, make sure that you're not already subscribed because you would be unsubscribing. So make sure it's checked, okay? Do that right now, please. Thank you. Hey, make sure that you don't fall for any spam in the comments section or on any of my social media. They can easily make something that looks like me. I don't have a WhatsApp. I will never ask you to send money or crypto on any of my platforms. Okay. Just make sure you don't fall for spam. I don't manage anybody else's money. I don't have an investment club. All right. So just don't do it. Even if you think it's me, it's not. It's spam. All right. Hey, anything I say is not a suggestion to buy, hold, or sell. All right. I have to say all of that because people are still getting spammed. I don't get it. I say it. But anyway, so this morning when I was live, the Dow was cranking up because the job numbers have come out. And we've been through this before. When the job numbers come out, right? The market don't know how to react to it. So the Dow actually went up by 300 points, literally. Let's look at this. The Dow was up 300 points, right? And as a matter of fact, let's go here. Listen to this. This is what I said this morning.
Trend growth number, and it happened with more people entering the workforce, and that's a good number. And
all right, so we got more people entering the work number. You saw that 315,000 on the job report. So we've been through this before. Just because the Dow is up and it started moving positive does not mean that the day will end this way. We've been through this too many times. As you can see, the pre-markets, Dow is up 164, S&P 27, and then 96, right? So we've been here so many times before, and by closing bell, the Dow could literally be down by 500. I literally said the Dow could be down by 300%, 300 points rather. And as we could see, look, I said 300 to 500 points the Dow could tank, and it comes down, right? And it's not because I knew exactly where it was going. I'm not that smart. It's just that this is what has been happening in this cycle. Once a cycle established itself, just learn the cycles. It's been happening more often than not. You know, good news come. And here's another thing I want you guys to watch out for. Whenever there's something that could tank the market this entire year, the market actually runs up to that bad news and then it sells off. Now, we had more people going to work. And so now the market was trying to say, I really don't know how to, take that information. I don't know what to do with it. It's just like, it's like this scene. I got to play it for you guys. It's like the market. You came to the market and the market said, hey, 318 or 15,000 new jobs, people got filled. Here's the job numbers. And then this is what the market did.
Yes! Yes! What are you doing? It's just a halftime.
And so that's what the market is like, what's going on? We're like, why is it running up? That's what I was thinking, just like this, why is it running up? I try to make it plain so everybody can understand. I thought it was pretty cool. But then I'm like, why is the market running up? This is not great news. But the market was going up, and then the Dow goes up 300 points, and then the market digests this information, and then it goes through a slight sell-off. So, Larry, what do you think about the end of the year? So there is an investor, Jeremy Siegel. He's a billionaire, and he said something that I agree with, that if the Fed only goes up an extra 100 basis points this year, meaning in total, that he thinks that the market will be okay. So check this out.
Here's Jeremy Siegel. I think they should do another 100 basis points by the end of the year. I mean, the market expects a bit more, but that does fulfill a good tightening. I don't think they need to go higher than that. And, scaring the market saying we're going to stay high through 2023 when they have no idea what's going to be happening in 2023, I think it was really not a good image to project.
All right, so that's Professor Jeremy Siegel.
So here's the deal. There was something called the Great Resign, right? People were not coming back to work. A lot of women, let me break it down into sectors. A lot of women didn't return to work. They were spending more precious time with their families. Of course, when COVID hit, no one knew how to treat it or anything like that. And especially for pregnant women, they didn't want to go and, cause harm, bringing something that none of us knew about, bringing it home. So a great portion of women did not return back to work and hasn't since COVID, right? They're starting to come back to work because the fear of COVID, we've learned as not just the country, but the world to actually live with COVID. And so a lot of them are going back to work. On top of that, they have to go back to work because the cost of daily living has went up so much. Gas and food, two things that energy and food, we consume on the daily. On top of that, you have people over the age of 50 that have retired are coming back to work because they are finding out that their 401ks are not enough. Their retirement plans are not enough now because of high inflation to live off of. So they have to return to work and work longer. And the ones that were retired, now they have to work a year or two more. On average, 2 more years, 1 to 3 years more. Now your retirement age goes up because of runaway inflation. And so that's what's really going on, good people. And so I'm just trying to break it down and make it plain. So I just want you guys to remember a few more things, right? I said this before, and I'm going to say it again because we need to understand all the moving pieces to this puzzle. Historically, over the last 60 years, stocks has risen over 16% after the midterms. Over 16% after the midterms, which is November, right? So that's historical data, right? That is something that we have to keep in our mind. We also need to be reminded that this month, September, is generally a bad month for stocks. It historically have been a bad month. Here's another thing. Analysts, I believe we're just going into a season of weak earnings, and these analysts have lost their ever-loving minds. They have not readjusted their numbers, and that's not good for the market. That's actually bad. So when these companies report, it seems like they're doing just horrible because they can't get supply, a lot of them. And COVID is still just wreaking havoc on these companies. So that's what I think. All right. And so these are some of the things that I wanted to go over. And so what do? I think we're going to have more days like we had today next week. I believe that next week just will be a seesaw week. We're trying to figure out what the Fed is going to do. Now, I'll tell you this. If the Fed keeps talking hawkish, like a hawk is aggressive, then it's going to cause the market to tank even more. Like Jeremy Siegel, I believe that we only need to go up another 100 basis points. So if he goes up 75 basis points on the next FOMC meeting, which is this month, the 20th and the 21st, Jerome Powell will be doing his rate hikes on the 21st. If he says we're going 75% and then another 25% and then we're done, I believe also, like Mr. Siegel, that the market will be fine the rest of the year. I do. If he says 50 and 50, which equals 100 total, I think we will be fine, right? But if he says we need to go 100 basis points or one full point, right? 1%, all at one time, that will be bad for the market. I believe that will be enough to force us into an early recession. So let's hope that he doesn't do that. I don't. There is very, 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 very slim chance that will happen. Let's look at the data, see how much inflation has slowed down, and let's take it from there. But as it stands right now, if you had a SQQQ play, you might have cashed out, and then the market went down, and then missed it. All right. So that's all I wanted to talk to you about today, good people. But also, too, you guys know that both of these promotions are still going on. They've extended them. All right. And I want you guys to see this, that Moomoo still has the 13 free stock, 3 more free stock by using my link below in the description. If you're on a cell phone, just click the title of this video and then you'll see a drop down from there. So if you've opened your Webull, if you've opened your Moomoo, then go ahead and fund it with a minimum of $100. That's Moomoo. That's where we're doing our gold plays. You find something that's going to be protection during the recession. That's what we're doing with Moomoo, right? So I gave you guys a few things to think about, right? You don't have to follow my plays. Think about stores like Ulta that do well, or stores like Walgreens and CVS. Think about things like energy that do well. But here's what you have to know. They're still falling soon as the recession happens, okay? Those are better plays to start getting once the recession actually starts. So look at that. Now, gold, when we hit a recession, there is going to be some people fleeing to gold. You can get a gold ETF. You can invest in physical gold. You do your own research with that. I gave one that is ticker symbol GORO because I believe in it. No one's paying me to talk about gold. I will never talk about gold. To be honest with you, I don't like gold. That's just me. I really don't like gold companies. But if I see something that's going to make me money, hey, if the girl got 3 eyes and one in the middle and she's making me money, if I was single, I'd be like, that third eye don't look so bad. I'm just joking with y'all. All right. And so let's look at this. So, also, too, we got Webull. Now, Webull is giving you 12 free stock worth up to $30,000. But what I love about Webull is it made my purchases today. I didn't have to do it. You just set it and forget it. Look at where it says reoccurring fractional shares. So I have 5 stock that it buys for me every Friday by itself. I set it and I don't have to touch it. It withdraws that money from my account into Webull on automatic, and it does my investing for me. That is investing, right? That's not trading. That's my investment plays. If you want to set it and forget it and make it easy, download Webull. All right, good people. I'm going to leave it right there. Make sure that you share this video with your family members, okay? That's what I'm going to ask you guys to do for me. If I've been any help, take this page, share this link, or go to your niece's and your nephew's phone and subscribe them to my page, because I am going to help people enter into some very good plays while the market is low. And then when the camel raises, I said it on yesterday, we are in a position where a camel has walked up to us and bowed down. All we simply need to do is get on its back before it rises up. And now is the time to be educating your family on investing. All right? Live, love, laugh, and learn. Have a safe weekend.